Agama Emomotimi, Director General of Nigeria's Securities and Exchange Commission, SEC, says bridging Africa's climate adaptation financing gap projected at $100 billion annually by 2030 demands regional capital market integration, adoption of ISSB sustainability standards, and bold institutional capital mobilization. Agama made this comment at the AfDB Annual Meetings, highlighting Africa's disproportionate climate burden despite contributing under 4% of global emissions. He noted the continent needs $3 trillion by 2030 for mitigation and adaptation. He urged alignment on sustainability standards to overcome data gaps, risk aversions, and to scale up climate finance innovation across African markets. Godson Ikebi, Senior Manager, ESG Sustainability and Climate Change Service, PwC Nigeria, joins me for this conversation. Good morning and happy holidays to you, sir. All right, since you're muted at the moment, if we can have you on mute so that we can dive into the conversation. We know that whether we like it or not, climate change is affecting...
Good morning. Good morning and happy holidays too.
Yes, yes. Whether we like it or not, climate change is affecting all sectors of our economy. We're seeing heavy droughts, rainfall, and there are calls for intervention. SEC DG is one of those now, but he has turned his eyes to the capital markets to help that sector. So give us a picture of the connection between the capital markets and the climate change issues that we are facing and how they can come together some way or the other.
Okay, thank you very much for that question. The capital market first is a place where you pull resources, pull funds. So, and in multiple ways. So that you go to the capital market to invest in terms of equity, buy shares in businesses, or you go to the capital market to also borrow money. So organizations, even governments, they go to the capital market to borrow money, whether vanilla bond or bonds related to climate, which are the green bonds. But in this case, the focus is on the green financing, green investments, green equities from the capital market, and the debt instruments from the capital market. So what do we need to do for the capital market? So what does this mean? Because we need borrowing, investing in equity, or having direct investment, portfolio investment coming to Nigeria to invest in companies who are driving, for example, climate change, in terms of, for example, solar energy companies in Nigeria from an infrastructure point of view, or to seek funds, debt instruments, green bonds that will be required to build those infrastructures, either to mitigate climate change and adapt climate change, will definitely be also going from the capital market through the capital, because when you go to the capital market to seek for money, what it means is that people are borrowing you money to be able to invest in climate change projects, like mitigation projects like solar, which also cover adaptations, or adaptation projects like urban development, energy infrastructure, road resilient infrastructures that will help to reduce climate change. So basically, that is the nexus between the capital market and the climate change funds that will help to reduce the impact of climate change in Nigeria or in Africa.
All right, thank you for establishing that connection. But $100 billion, how realistic is this for Africa to mobilize $100 billion annually for climate adaptation by 2030?
There's a recent report that was released early in the month or late May by the African Finance Corporation. The report clearly shows that in Africa, for example, that we already have, this report is titled The State of the African Infrastructure State as at 2025. And the title of that report is Domestic Capital Mobilization. And what the report is saying, again, is not about climate, but it's actually linked to climate. What it's saying is that Africa currently has like $4.4 trillion in domestic capital mobilization, mobilize domestic capital to address infrastructural needs. And when we talk of climate finance, and when we're addressing climate change, what we are simply saying is that how do we build infrastructures? How do we build how do we develop policies? How do we reshape the financial system to address sustainable development, ensure that climate adaptation does not consume the continent in terms of the negative impact it will have on the continent? That's basically what we're trying to achieve with that.
Mm-hmm.
And that report says that currently that 1.1 trillion of that funding is with the pension funds, the insurance industry. Commercial 1.1 trillion, 2.7 trillion, above 2.7 trillion is with the commercial banks, mobilization. And over 400 billion is foreign, external reserves. And part of the 1.1 trillion also is public development finance institutions, such like the AFC, the DFI, the DBN, and the Bank of Industry. So from looking at inward, let's start from inward. If we look inward, we can mobilize this capital. Currently, this is what is happening. The pension funds currently has about 28 trillion naira seated pension funds. Out of that 28 trillion, only 1% have been mobilized. That is about 14.something billion have been mobilized for, which is about $1 million, have been mobilized for infrastructure. So the question is that we have not even mobilized our pension funds to drive climate financing, to drive, from an infrastructure perspective, and what we need actually to unravel the climate finance conversation. Mm-hmm. So what I say is that from a perspective of, looking at the finances, domestic capital mobilization, we can finance agriculture. We can finance energy, because the major blocks of climate issues are energy, for agriculture, energy and agriculture. Mm. For example, what is in energy? So how do we transition, for example, how do we transition into renewables and scale renewable? Mm. How do we ensure that gas as a low carbon is part of our transition to ensure that we address adaptation?
There's so much.
Infrastructure for drought-resilient crops and flood-resilient crops.
This conversation is quite expansive. There's so much that needs to be said. There's so much. There's a larger conversation that needs to be had here, and hopefully, with time, we'll see that conversation being had and the conversation translating to actual action. But speaking of action, we know, and you have hinted at that earlier, Nigeria was the first in sub-Saharan Africa to issue the sovereign green bond. Give us more details on that and the momentum that we can drive to push such initiatives to meet up with climate financing and action.
Yeah, like you said, Nigeria was the first. Nigeria has actually issued 2 sovereign green bonds. That was during the time of government of General Buhari. Then after that, Nigeria have also gone further to issue corporate bonds. We have companies in Nigeria like a bank, and we have also other companies like power companies also who have issued corporate green bonds to be able to boost infrastructure. And some of the funding from the Nigeria green bonds were used to fund solar technology projects in schools in Nigeria, many grid projects in schools, and some were used for tree planting purpose, which will address climate mitigation, carbon sequestration, which falls in line with climate mitigation and adaptation. And also, in terms of the corporate green bonds we have seen, actually 2 sovereign green bonds by Nigeria, from a bank and from a power company. These bonds have been used also to fund solar energy projects. They also be used to fund flood defense mechanism in Lagos, and also hydropower projects and some solar power projects in Nigeria and all that. So again, in all, we moved the needle in terms of trying to raise capital from the capital market through the green bond instrument. But again, like what I said earlier, for us to be able to ensure and achieve the climate finance that is required, one of the things that is required is also look inward also and mobilize the capital that we have from our institutional investors like pension funds and insurance and the DFIs. And already we are seeing a trend in Nigeria. For example, I can say to you that the DFI in Nigeria today that has been able to assess that is like a direct entity access to the Green Climate Fund. Right. So the Green Climate Fund is one of the biggest funds in the world. That's over $15 billion. for climate finance, to fund climate finance adaptation and mitigation in developing countries.
Right.
And the Green Climate Fund is tailored to addressing 130 countries globally, and it has over $15 billion and 270 projects. And it's great to say that the Nigeria DFI is currently one of the direct entity access to the Green Climate Fund, and we're able to pull like $250 million from the Green Climate Fund to finance climate finance in Nigeria.
Yeah, so Nigeria is definitely championing, climate financing action when you compare to what's happening across the continent. But before I let you go, the most powerful man in the world, right? That's the president of America, Trump. We know that we know his stance, right? Climate action, climate financing has moved down his scale of preference. And we're seeing multilateral institutions that do support climate action be somewhat defunded. So how do you create a case for further financing on the continent, considering the larger stance on climate?
Well, climate is a developmental issue. It is not just about the environment. It is not just about the narrowness of adaptation and mitigation and resilience. It's a sustainable development conversation. It's an investment conversation. It's an economic conversation. And currently, what we see is that the investors are not pulling out. The investors are following the sustainability trail, and also following actually in terms of, because there is revenue, there is profit, there is solutions to be achieved. So when there is development, people grow. When investors put their money to drive development in societies, in other markets, they also have returns on investment. So that's what we are seeing. So despite the actions of Trump and in America and in America, what we are seeing from investors and what we are seeing from institutional investors and impact investors is that they are still very much interested in driving this conversation, in investing in this, because it is not about just the environment. It is a question of development. It's a question of our survival. It's a question of economic growth. So the actions of Trump is not stopping the flow of capital to climate investment or climate finance, because climate finance is not an environmental constraint, an environmental issue. It is a sustainable development issue that drives economic development, growth, and wealth creation and revenue.
Thank you very much. Godson Ikiebi, Senior Manager, ESG Sustainability and Climate Change Service, PwC Nigeria. Thank you.
Thank you very much for having me.
All right, that's it on this week's edition on Business Edge. Follow us on social media, and we are at News Central TV. Head to our website, www.newscentral.africa, and download our mobile app on Play Store and App Store. Till next time, I am Joanna Mustafa Barakadisala.